In this video, we will look at Visa stock. We will look at how Visa makes money. We will run through some of their numbers. We will look at their revenue, return on equity. Then we will look at their valuation. First, we will compare the valuation to its own history, then to its competitors, and then in the end, we will come up with a fair value of Visa stock. So, let's get started. First of all, to not miss a single new video, you can subscribe by pressing the subscribe button under the video. Okay, first let's look at Visa's business. Visa is not a bank, it's not a financial institution. It makes money on fees when a customer buys something from the merchant by using Visa's cards. So this image is from their annual 10K report. It is what Visa calls the four-party model. So imagine that customers buy something from the merchant, customer has its own bank, and the merchant has its own bank. What Visa does is it organizes money transfer from the customer to the merchant, and it gets fees on every transaction. So again, Visa is not a bank, it's not a financial institution, it doesn't issue cards, it only makes fees on every transaction made by Visa's cards. Okay, now let's look at some of their numbers. First, let's look at the revenue. So we can see a steady trend up, except for the year when COVID happened. The average growth rate is close to 10% for the last 10 years. When we will make the calculation of fair value, we will take this into consideration that the average growth rate for the last 10 years was close to 10%. If we look at the book value per share growth for the last 10 years, we can see the average growth rate of 8.6%. Book value per share, according to Warren Buffett, is a great indicator of the future price performance. So the average growth rate was 8.6%. When a company has a moat, a competitive advantage, it is visible in their numbers. Visa has a high return on equity, more than 30% in the recent years. What is return on equity? It is net income divided by equity, total assets minus total liabilities. So it has a high return on equity of more than 30%. When researching a stock, what I really like to see is that if gurus, super investors that I follow, are purchasing the stock, and if yes, at what approximate price. And Terry Smith, investor that I follow, owns Visa. He has around 3% of his portfolio in Visa. He has close to 7 million shares, and he added around 10% of that position in the recent year. So this is not a large addition, but this is also a positive sign. Okay, now let's look at valuation of Visa. First, we will compare the valuation to its own history, then we compare it to its closest competitor, MasterCard, and then we will try to come up with a fair value of Visa stock. First, let's look at its own history. We will use free cash flow yield as a valuation metric. What is free cash flow yield? It is free cash flow divided by market cap. Free cash flow is cash from operations minus capital expenditures. We are using next 12-month free cash flow yield. Okay, this is the chart of free cash flow yield for the last 3 years for Visa. The average was 3.2%. The last was 3.75%. So according to this metric, Visa is trading above its average free cash flow yield. So according to this metric, Visa may be undervalued compared to its own history. If we look at the same chart, but we will add MasterCard to it, we can see that Visa is trading at a higher free cash flow yield, so Visa has lower valuation compared to MasterCard. The current free cash flow yield for MasterCard is close to 3%, but for Visa it is 3.75%. So according to this metric, Visa is trading at a higher free cash flow yield, so it looks cheaper than MasterCard. Okay, now let's try to come up with a fair value of Visa stock. First, we will need the growth rate. Analysts are projecting for the growth rate for the next 5 years to be up to 16%. I believe this is on the high end. The average growth rate of revenue for the last 10 years was close to 10%. So, to be on the conservative side, we will use 12% growth rate. I have made a separate video how to make this type of calculation. What we basically do is that we take current earnings per share, grow them using the growth rate, We get the future value, we multiply it by price to earnings. I use the current price to earnings of close to 34, discount it back to today using the required rate of return of 10%. Then we adjust for net debt. Visa has a lot of debt, but it also has a lot of cash. After adjusting for net debt, we get the fair value of Visa stock of $222 per share. So according to this metric, Visa is trading close to 9% below its fair value. Okay, I like Visa's business. It definitely has a moat and it's visible in their numbers. I like the valuation compared to its own history. Compared to MasterCard, according to my calculation, Visa is trading below its fair value, around 10% undervalued. So Visa may be a good purchase at this level, but for me, I would like to have a higher margin of safety. Also, Terry Smith, the investor that I talked about, added a much larger position in Google and Facebook in the recent quarters. Here's the video about Google and Meta stock. If you are not subscribed to the channel, you can do this by pressing right here. You will not miss a single new video. Thank you for watching till the end and see you in the next video.